afternoon. What we have is Facebook after our earning release. This here is a 15-minute chart. The original number comes out and it goes down to $158, and this is a very big wick, and it's coming back up right now at 163.37. As far as the earnings, and we will be going over this with our people, so I'm just going to talk a little bit about that. You can see where they got that big pop off of the bottom after hours earnings. Here's what I have. Facebook beats by 20 cents. Beats on the revenue. On that knee-jerk reaction, which is very positive for Facebook, I also want people to know that they sold $157 million going into the closing bell as far as the money flow. That's negative, and those are big, big sellers. So they beat on revs, report Q2, earnings of $1.32 per share. That's 20 cents better than Capital IQ consensus of $1.12. Revenues rose 44.8% year over year to $9.32 billion versus the $9.19 billion. So Capital IQ consensus. They're talking about the daily activity with users. They were 1.32 billion on average for June of 2017. That's an increase of 17% level year over year. Monthly active users now, we're going to have a 2.01 billion as of June 30th. Okay, so that's good. The mobile advertising revenue represented approximately 80% of the advertising revenue for the second quarter of 2017. Now, we start getting into the head count was 20,658 as of June 30th of 17. That's an increase there on the head count of 43% year over year. Effective tax rate was 13%. Expectations were for the mid-teens. So that's part of what's in here. There isn't anything wrong, in my view, with Facebook as of now. We got a beat on the only difference is when we went into the earnings and Facebook was $166 on the high, and basically they dropped it here down to 158, and now we're coming back, but we're only coming back to 163, 164. Here they come. Here, look at it. Here they come. 164.50 as of this moment. So there was a big knee-jerk reaction and buying the dip in the after-hours market down here at 158, and now it's at 164. This is the after-hours activity on Facebook and how to trade the earnings season. And taking the call and put charts tomorrow, they're going to steal the premium out of the calls. I can tell you that right now. So the 160 is going to, the $160 calls for tomorrow are going to come into play, and we're going to watch the 165s. So a lesson well learned is buying the dip on that emotional, it's called an emotional event in the price. Emotional event where that number hit, it got slammed, it's come back up. This is a 15-minute chart. And you can see where that dip came in right here. So one thing about Facebook, we're going to deal with it tomorrow. We're going to deal with the 165 puts. We're going to deal with the 160 puts out of the money. And we're also, I have my bigger traders that have a lot of money. You know, they've been around with me. They got in on the dip. And this is what happened. So we're coming right back up right now to the close. There's going to be a conference call. But nonetheless, this is the emotional event that happened on the headline release on a 15-minute chart. So now we're back up here at 166. This is how the after-hour volatility works. And having enough intraday capital, you can take advantage of these dips. We've been doing this for many years. And our other guys bought the dip, but they've got like $800,000 buying power. Of course, they can buy 2,000 shares or 1,500 shares and selling it right back, selling it right back. This is a 15-minute bar. I'm going to conclude it right now.